raised your Kospi target to 12,000 within a one-year time span.
So
Tim,
those are not crazy numbers, right?
You say it is about earnings, but when it comes to Korea, it's also about highly leveraged retail ETFs, correct? I mean, that is key right now.
That has been a new phenomenon, correct?
Yeah, correct.
Right.
So I'm just wondering, how healthy is a target of 12,000 when it is based on highly leveraged ETFs? Well, Korea, I mean, you've been bullish. I mean, you raised your 12-month target, right? Is it less attractive to you right now?
Quick answer is no, and we still remain very, very positive, just to be clear about that. But look, that being said, we're also hopefully reasonably investors with some perspective and some rationality. And so I think we need to certainly recognize that there was a significant amount of leverage which accrued in the Korean stock market. To put some numbers on the table, the amount of leverage ETFs, the AUM of that at the beginning of this year for Korea, both domestically in Korea and then also outside, because there's some listed in Hong Kong, for example. That was $5 billion at the beginning of this year. At the peak on June 22nd, it was $53 billion, right? And then at the low on Thursday, it came down to $14 billion. And now it's back up at about 24, thereabouts. So, short story is that the leverage ETF AUM has come down by over 50%. And what's important about that is that every day there's what's called dealer gamma hedging, which means that the dealers have to either buy or sell proactively. Market up, you have to buy, market down, you have to sell in order to maintain that 2 times leverage. So there was this inherent volatility enhancing factor with these leveraged ETFs, which was augmenting what's already sort of a normally frisky market in terms of the cyclicality, the fact that over 50% of the market is the semiconductor memory sector, which inherently has high volatility. So you have sort of a normal fundamental underlying highly volatile environment or volatile environment amplified by this leverage ETF. Now, the crackdown that the authorities have made and the fact that the assets under management have declined, I think overall is a good thing. If you actually just get the volatility down, because Korea's 1 week volatility as of last week was like nearly 100%. That's just too much for most investors to stomach, and I think we need to sort of calm things down and have a more balanced environment. Once that happens, then our view is that the underlying fundamentals will reassert themselves, and we think that they're very attractive.
But the thing is, vol remains very high, and on the back of Black Mondays, circuit breakers, I mean, you must look at this market slightly differently, right? And I'm also wondering, having raised your Kospi target to 12,000 within a one-year time span, would you have to relook, review?
So we've looked at that again, and we may call us stubborn, call us foolish and benighted, but the numbers actually strongly support that if the earnings come through. Look, the key takeaway here, cutting through all the noise,
contingent on earnings.
Is earnings. If earnings come through at current valuations, what's discounted, you have to be very, very bearish 1 year out in order not to think the market's going to be higher. Now, is it going to reach our 12,000 target or not? Who knows? But is there a strong case for the market moving higher and taking out the previous high, which was 9,115 on June 22nd? We think the answer is yes. And let me just put the facts on the table. The market today is trading at 5.1 times current consensus 12-month earnings. Those earnings this year are growing, we think 320%. Consensus has come up to our number. It's now 317. A month or two ago, it was 280. We were at 320, and it's come up to our number. For next year, we think that the growth will be 35%. Consensus actually moved a bit above us. It's about 37%. And for 2028, we think earnings grow a further 20%. Now, if you think those are okay, then the market at 5 times earnings is very undervalued, and the market is effectively saying that it does not believe that the semiconductor memory cycle can continue, which we think it is. It's a longer discussion. We think we're in a larger and longer semiconductor cycle than is typically the case. So let's just run some numbers. The market typically peaks in previous cycles at about 10 times at the price peak, about 10 times forward earnings, and on the earnings peak, which has typically been a bit after the price peak, at about 9 times forward earnings. So with the market at 5 and small times forward earnings, we are 3 standard deviations below where we typically are. So our 12,000 Kospi target is based on what we think the earnings will be, as I just described, and only a 7.8 times forward multiple, which is 1.3 standard deviations below the longer term mean. So
Tim,
those are not crazy numbers, right?
You say it is about earnings, but when it comes to Korea, it's also about highly leveraged retail ETFs, correct? I mean, that is key right now.
That has been a new phenomenon, correct?
Yeah, correct.
Right,
so
yeah.
I'm just wondering, how healthy is a target of 12,000 when it is based on highly leveraged ETFs? I mean,
So I take your point, but it's not based on that. It's based on the earnings and the appropriate valuation, how the market's traded in the past. So the leverage ETF is a new phenomenon.
Liquidity, though, it's driven by the retail investors.
This is true, but it doesn't have to only be driven by retail investors. So retail investors were net sellers of the market all of 2025. And for the first month of 2026. It's only very recently that they came in. Now, the market did great last year in 2025, and that was driven by foreign investors. So if the earnings are coming through, and if there's a general perception that the AI trade, the AI hardware supply chain trade, of which the semiconductor memory stocks are an important part, if there's a sort of a broader view on the part of foreign investors that is going to continue, and that is being validated by the quarterly earnings delivery, and Samsung just delivered fantastic numbers, and we actually just put it on a conviction buy list yesterday. Then we think that foreigners could come back to the market, and retail investors don't have to be as significant a force as they have been in the last 3 months.
Japan is the other market we're focused on, given the coordinated intervention between the U.S. and Japan. I mean, is that impacting Japanese stocks? How are you looking at Japanese stocks?